Those directly affected will be the first cohort of CPF members who turn 50 this year and will be 55 years old when the scheme is launched. This group will be automatically covered. For those who are not, such as those aged 56 and above in 2013, there's an opt-in coverage. As for criticisms that the scheme is truly beneficial only to those with enough cash in their retirement accounts, the committee had this to say.
As for those who are, say, having a very low minimum sum balance, and therefore the payout will be so small, that is really a problem which is a larger national issue. I don't think this committee can sort of make suggestions for all these various problems. But all we can say is that this scheme is a good scheme. Will government give them one-off assistance to come onto the scheme? That's all we can do at the moment.
Groups exempted from the scheme include those who are physically or mentally incapacitated and those who already have a pension, annuity or other benefit equivalent to the longevity insurance scheme. So here's how CPF Life works. When participants join the scheme at age 55, their minimum sum cash balances will be split into two parts, a larger part that remains in the retirement account and a smaller part called the refundable premium. The refundable premium is where money will be drawn down and paid out to a CPF member each month for as long as he lives. To ensure the scheme is flexible, participants can choose when their longevity insurance starts. That is, they can choose for the payouts to start either at age 65, 70, 75, 80, 85 or 90. If they do not do so, they will be placed into the default Refund 80 plan with the payout starting at age 80. And to address concerns that hard-earned savings will be lost should a member die before their longevity insurance starts, the committee has proposed a refund feature. So if you opt for the refund feature, in the event of your death, your beneficiary will get what's left in your retirement account and your refundable premium minus the interest gained from this premium. So how much does one stand to gain? Here's an example. Under the current scheme, a CPF member in the first cohort with $67,000 in cash in his minimum sum at age 55 will get $600 for 20 years from age 65. Under the new CPF Life scheme, the same member can expect to get $610 a month for as long as he lives, given an assumed interest rate of 5%. 60% of the 35,000 or so active CPF members in the first cohort are expected to get this amount under the default Refund 80 plan.
One of the biggest satisfaction I have when I met some of them is people now feel that now that you can decide for yourself, now that you can decide what's paycheck you want after 80 until the day you die, that's a very big satisfaction. For hope, at least you can plan what you want to do.
Now that all is said and done by the National Life Insurance Committee, it's time for the CPF board to put the various recommendations into action. Now the government has 5 years to do so before the insurance scheme kicks in 2013. Manpower Minister Ng Eng Hen is expected to give his response to the various recommendations tomorrow, and he's also expected to announce some incentives to help those who are not automatically covered by the scheme to opt in. For more information, you can call the CPF hotline at 1-800-LIVE-CPF. That's 1-800-5433-273. This line will be activated from tomorrow. Imelda, The Straits Times.